Hello, this is Jordan, and this video is being recorded on Tuesday, May 24th. Thank you so much for joining me today. In this video, I am going to provide a brief technical update for gold and silver. If you haven't already, make sure you subscribe to the channel, like this video, leave me a comment. Thank you. Now, I haven't done a technical video. It's been at least several months, probably more than that, but I wanted to get into the technicals of gold and silver, just focusing on the technicals, less the macro, less the sentiment stuff, so I'll try and keep that to nearly zero. But starting off with gold here, we have a weekly chart. I know that gold, I think it's up to the 1850s today, so this is a day old, but the real key for gold is there's stiff resistance around 1880 to 1900. So that's going to be a very difficult level. And if gold is going to remain weak over the coming months, moving forward, that's going to be a level where if gold can recapture it later on, that would change the at least the short term or the current trend. And at least lead people to conclude that it's higher. Right now, the trend is, at best sideways. Some people would say lower. But so 1880 to 1900 is going to prevent that from changing, at least in the very short term. So that's very stiff resistance there. So gold's into the 1850s today. So maybe this rally could continue a little bit higher up to 1880. Don't see it going much higher than that. Now, on the support side, there's several things to look at. We have support around 1750, and of course we have 1675, which is the 38% retracement. However, we also have the 40-month moving average. That's an equivalent moving average on the weekly chart. We know that historically over the last 35, 40 years, it's been a very significant moving average, not only for the stock market, but also for gold. So that's coming in now at 1710. So once the month ends, I think it could be up to, I want to say 1720, 1725. So that's a good distance above 1675. So if you're looking for a downside target, keep that in mind in the low 1700s, the 40-month moving average. Again, we have, gold, I believe it rallied from around 1780. That's a good support level. But we also have, again, 1750, the 40-month moving average. And then we have the 38% retracement at 1675. So it's a little uncertain to me. I mean, it's always uncertain, but it's very uncertain to me what's going to happen here. Maybe gold can rally up to 1880. It'll fade. How the Fed, how in financial conditions, how much tighter can they really be before the market senses they'll have to back off. That's when gold should rebound and a lot more buying should come in. But, if that's 2 or 3 months away rather than 1 month away, that's more potential selling for gold. And we can see more selling after it hits 1880. So that's the setup. Now, last thing with gold, go to the bottom there, gold against the S&P 500. We have the weekly equivalent to the 200-day moving average. So gold is trending up against the stock market. And the 200-day moving average, again, the equivalent there, you can see it's sloping up. When we're looking at moving averages, people, the direction, the slope of the moving average is so important. When we're looking at these relationships and we want to see bullish things, it's very important to see that the slope of those moving averages curl up, especially with long-term moving averages. So this is very important. The fact that the gold is trending up against the stock market and the moving average is sloping higher. It's so important because that type of strength typically precedes these big moves in gold. So that doesn't mean gold is going to rocket higher in the next month or even the next 2 or 3 months, but it's just a very, very good sign for, as we're looking out over the next few months, next several months. And so if that ratio was not in an uptrend, if it was in a downtrend or was kind of weak and sideways, I would be a lot more concerned about downside pressure in gold. So that is a really, really good sign. So very happy to see that. That augurs well, definitely for the second half of the year, in my opinion. Now, enough of gold. Let's talk about silver. So let's focus on the price action first. The price action since 2020, I've seen on Twitter more than a handful of people. I'm not singling anybody out, but I've seen quite a few people saying this is a bullish flag on silver. People, this is not a bullish flag pattern. We have to really understand these patterns and what goes into them and what doesn't. A bull flag pattern, for the most part, the market is only going to retrace 38% of that move. A bull flag is a very tight consolidation. And so silver, the 38% retracement is around 23. So not only in the last week or two, silver has broken down, but you've lost that support at 22. It's below the 38% retracement. And if you just look at the chart, silver closed at very close to a 2-year low. So if silver was in a bull flag pattern, it would be holding above 23 the entire time. So if you just carefully look at the price action of silver, it's not bullish. It's not a bull flag. So we have to understand really what makes these patterns, what goes into them, and what doesn't. So silver has broken down. It has rebounded a little bit. But looking at the support level, I mentioned this before, you can see there the line that comes in the high 18s. 1860, 1875, that's an important level. We have the equivalent to the 80-month moving average there. You can see the black arrows. Why I picked that? Well, if you look at 2002 and 2003, you can't see that, but silver was holding below the 80-month moving average. Then it went above it. It was a clear bull market. You can see 2008, that provided support at that bottom. And now we're coming into a situation where the 80-month moving average is in the very high 18s. It aligns with the lateral support. You can see they're just below 19. So there's a confluence of support there. In addition, the 62% retracement of that 2020 surge, that comes in the high 18s. So there is a lot of support just below 19 in the high 18s. So if there is another decline in this market, obviously we'd probably see the same thing in gold. If there's going to be another sell-off in precious metals, look for that level, to potentially provide the bottom for silver. Now, in addition, let's look at sentiment in the next row. That's the net spec position divided by open interest, 17% reading the last week. That was, I believe, a 3-year low, or at least very, very close to a 3-year low. But who knows? Who knows if the net spec position is going to go down lower than that? Will it decline to 5 or 7%? We'll have to see. But looking further out, if you get silver at $18.75 or $19, and then the net spec position is close to zero, that could be the bottom. That's really supportive of a bull move starting at that point. Now, last thing, let's talk about the gold-silver ratio at the bottom. So this is gold divided by silver. Look at the two arrows there. Silver, when we get a spike in the gold-silver ratio, that usually corresponds with, I don't want to say a crash, but it really does. If you get a spike in that ratio, you can see, end of 2008, COVID low 2020, you get a spike in the ratio. It usually corresponds with some kind of a crash low in silver. And that's important because from that point, silver outperforms gold immediately. Now, there's other bottoms where you don't get that crash in the ratio, and silver, gold kind of both rebound from the low, but gold outperforms silver for a while. But if we're setting up for a crash low, or I should say, a surge in the gold-silver ratio and some kind of crash low, that corresponds to an immediate bottom in the sector, and silver outperforming immediately. Now, zooming in on the gold-silver ratio, it did have a mini breakout there. It has a measured upside target of about 90. It's come pretty close to that. There's also a potential target of 100. So that's something to consider over the next, month or two or three. Is there going to be another sell-off? Where can the ratio go? Is it going to reach 100? Does that correspond with $18 silver, 1,800 gold, or even does the ratio go above 100 and spike to 105, and you get some kind of low in 1750 for gold, or at 1710, and then silver does a spike low at 16 or 17 or wherever. I'm just throwing out scenarios, but that's how I see things. We're technically, I don't think we're at a bottom in the sector. I think we're having a rebound, a reflex rally, and I think we're probably going to see more selling, when this rebound runs its course in both gold and silver. Now, nevertheless, with that being said, I've talked about macro, I've talked about fundamentals. We are getting we're getting much closer to the point where the Fed is going to have to stop. I mean, the economic data is getting worse and worse. We're seeing it in the junk bond market. Spreads are blowing out. If we start seeing that in the investment grade market, and we see the 10-year yield fall to the low twos, that's going to be the setup where I think you could see a bottom in a rebound in precious metals and the start of a real bull move. But I don't quite think it's here yet. I know that was a long video, longer than I wanted, but let me know what you think. Really appreciate your comments. Thank you so much for watching, and I'll talk to you guys again in the next video.